What? Wait, mortgage rates are what? Hey, what's up, everyone? It's Adam Rinkin, Denver's premier mortgage lender with Caliber Home Loans. Thanks for tuning in today. Yes, that is correct. Mortgage rates did tick past 6% again this week. So the average 30-year fixed rate right now is above 6%, which matches 2008 levels and also our highs that we hit back in June of this year. So what's causing mortgage rates to stay elevated? Well, inflation is still the number one primary concern. We all see it at the gas station. We all see it when we go to the grocery store, rent, housing prices, etc. So we know that is number one key. And until we see inflation numbers come back down, you're not going to see mortgage rates come back down. Uncertainty across the globe. The Ukraine-Russia conflict, our business trade conflicts with China, potential railroad strike that we had, a lot of uncertainty, and anytime that happens, you're going to see the market shift. So most recently on Monday, we had inflation print numbers that came out that were higher than expected. And that caused the market to freak out a little bit, and that is why most recently you've seen the mortgage rates tick up again. So Adam, if you're telling me that we've got high interest rates right now, I know the housing prices have been high, why should I buy? Shouldn't I just wait?
No, and let me go over some stats on, again, why I don't think it is. So first off, if you look at this, the prices are down 3.4% from last year. Also, houses are closing 99.1% to list price. So that means they are not closing 100% to list price, so you are getting money off of the top there. Concessions were on 50% of the transactions priced $400K to $800K. The average concession on those was $5,500, which is typically enough to cover all of your lender fees, title fees, and appraisal fees. All right, so what we have here is a 3-year cost of waiting analysis. I did this through a company called MBS Highway, which is a company I subscribe to. They have essentially put in their forecasted appreciation rates for the property, and then I've put in today's interest rate as well as forecasted interest rates to kind of give you an estimate of what your appreciation and what your pay down of the loan would be over the next 3 years. So if you look at, of course, the first section, we've got our loan amount of $570, which is a $600,000 purchase with 5% down. And then we've got our, 4 different kind of categories to look at. So the forecast for the next 6 months is flat to slightly down. So that's why you're seeing the property value roughly stay the same or even slightly decrease. And then after about a year, we should see some appreciation get back in the market. Waiting 2 years, we should see get back to kind of that normal appreciation. And 3 years, because of our housing shortage, we should still see that appreciation get back to normal levels. So if you do this over that time period, here on the next slide, you'll see that the total cost of waiting essentially costs you $80,000 by waiting the next 3 years to purchase, or even $50,000 if you're only waiting 2 years. But this is where the time compounding of money comes in. And while we can't time the market perfectly to get the best interest rate, the best price on housing, etc., a lot of the factors I mentioned earlier on some of the Denver stats are, again, great reasons that it is a good time to purchase a home, especially if you have, a lower down payment and don't want to have to potentially worry about any of those crazy over askings again. So thanks for tuning in. If you have more questions about this, please let me know. Again, Adam Rinkin, Denver's premier mortgage lender. Please like, subscribe, and share, and appreciate you tuning in today. Thanks.